The protection of rentier interests is quite striking. This is something we looked at in a report quite recently. So if you take, for example, compare the approach between landlords and tenants. So on the one hand, landlords, they're the only group in the economy at the moment, essentially, who the government are saying, you are guaranteed to receive your income in full. So at a time when households are being furloughed, they're seeing incomes cut, or indeed they're being shoved onto universal credit, when businesses are being told they have to shut down and seeing a collapse in revenue, government saying to landlords, look, you can continue to extract rents from tenants at the full rate. There is absolutely no haircut that's going to be imposed on landlords. It's similar with the financial sector. What's striking about the UK government's approach to supposedly helping businesses is that it's all been mediated through our private banking sector. So the government's flagship business interruption loan scheme, what's important to understand, this isn't a scheme to support businesses. It's a scheme to provide a guarantee to banks. It's a scheme to provide a guarantee to de-risk bank loans, to try and cajole banks to then lend to businesses. And of course, the problem there is that the banks that we have, the big banks in the UK, aren't remotely interested in lending to small businesses. They haven't been for a long time. They want to plow money into real estate and financial markets. And so while Rishi Sunak stood up and said, we've got this unprecedented £330 billion of support going into businesses, that was £330 billion of guarantees to banks. And a fraction of that has actually been lent out to businesses.